gentlemen, the performance of the company and the financial results for Q3 have already been circulated to you. The business scenario remains the same with some signs of improvement, but it is still to be seen how it goes in this quarter. You have the numbers with you, and I now welcome all of you to proceed with the question and answer sessions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, please press star and 1. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. The first question is from the line of Bhumika Nair from IDFC Securities. Please go ahead.
Yeah, good evening, sir.
Good evening.
My first question is related to the the rail segment. Just wanted to understand what has happened during this quarter, as we've seen a QQ decline in volumes. And if you look at margins as well, there has been a decline. And if I remember correctly, in the earlier conference call, we had mentioned that we had taken some price hikes to pass on the higher imbalance that was import-export imbalance that was there in the trade, as well as you would have seen the full impact of Viramgam during the quarter. So what has resulted in this QOQ drop in profitability?
Hi, Bhumika. The two main reasons have been increase in imbalance as well as slowing down of trains. So the Northwestern Railway, on which predominantly all Mundra Port and Pipavav Port trains are run for Gadiar route, the hub, has undergone a large amount of capacity expansion and repairs work, resulting into slowing down of trains, and the overall traffic on that route has gone up. So what normally we would carry with 22, 23 trains is now being carried with 27 trains on an average, and that has resulted into increasing the fixed cost of transportation, because we had to take these trains on lease from some other operators who had spare capacity available. The cost of imbalance also has gone up on account of the difference between import and exports, particularly on the power route being very, very high for Gadiar terminal. So these are two major contributing causes as far as the drop in margin is concerned. Simultaneously, we have also seen a little bit of pressure on the discounts. The competitive pressure is intensifying. So there has been an increase in per TU as well as overall discount during the quarter. So that's why the numbers that we see as far as quarterly profitability on a per TU basis, your observations are right. But if we compare quarter 2 with quarter 3, that is sequentially, we remain more or less at the same level as far as our EBITDA contribution is concerned, barring a drop in miscellaneous income. So operational EBITDA continues to be more or less at the same level.
Okay. And would it be possible to share how double stacking charges or benefits were there during this quarter, as also in terms of discounts and empty running charges, just so that we get a sense on how things have moved?
The discounts at present, which are given by way of invoice as well as by way of trade discount at a later date by way of credit note, have gone up on a per TU basis roughly by about 300 rupees. And our underframe cost for this year has been marginally up as compared to the last year on a per TU basis. by about 150 rupees. So that's the impact that comes at the variable cost level. At this fixed cost level, basically 4 trains additional on lease have resulted into about 50 lakh rupees per month of additional fixed cost, which again gets distributed over the entire volume. So these are the 3 causes.
Okay. So this impact you mentioned on the, slow movement due to the railways, has that settled down during this quarter, or is that continuing?
No, it has not settled down. In fact, our experience during quarter 4 has, on occasions, has been worse than that of quarter 3. And since this capacity expansion work is likely to continue for a longer period of time, the productivity per train is expected to be lower sequentially as compared to quarter 1 and quarter 2 in quarter 3 and quarter 4. That's why we have decided to go in for a leasing of additional trains from a wagon leasing company, because this capacity, spare capacity which is available in the market, may vanish at short notice. That's why we need to build our capacity. So we're getting 3 additional trains from one of the wagon leasing companies.
Okay, so so this would continue for the next 2 to 3 quarters, or could it be longer than that?
It could be longer. In fact, we are engaged in a discussion with Indian Railways to get visibility of mobility on this sector. And amongst all operators, there are 2 or 3 operators who get affected by this the most, because their terminals can be fed from Mundra Port and Pipavav Port only by the northwestern route.
Okay. So, so in that sense, are we losing market share to some of the peers because of this?
No. There was a marginal shift which took place initially because we were not able to evacuate containers. But once the additional capacity came in, we have gained back that business. It was with our knowledge that the business was shifted to some other operator because of higher pendency at the port and higher dwell time. But that business has again come back to us because we've increased our pendency.
Okay.
Our service level in the market continues to be praised by the trade, and the quick return of demand after it was shifted to some other operators is testimony to that.
So on a QOQ basis that we've seen a drop in volume should not continue, and we should come back to a QOQ growth coming back.
That's right, yeah.
And on Viramgam, if you can mention, how have these savings stacked up? Because we had seen some savings of 2% in the previous quarter for the period that it was operational. So has that helped in any way? Or
yeah, that has helped. In fact, without that, probably the impact of imbalance would have been much higher. We have started doing our operations for JNPT from Viramgam in a big way, and we have practically saved about 4.5 crore rupees over a matter of the 9 months during the current year.
Okay.
And, yeah, and this is without starting our CFS activity at Viramgam. So all businesses at present not being routed to Viramgam. We have received permission from the Interministerial Committee for setting up a CFS there, ICD there. We also have received a 7AA notification, which is first necessary step towards opening up an ICD. So once the notification by the local commissioner is issued, during quarter 4, we should be able to start our ICD operations at Viramgam as well. That will increase the contribution of Viramgam into the overall kitty.
Okay. And lastly, just wanted to understand, we increased prices by about 1,000 to 2,000 rupees per TEU on our import volumes for across the 3 ports, which is Mundra, Pipavav and JNPT. So this increased imbalance or the delays in terms of train movement, which has resulted in higher amount of leasing, etc., that has not been able to, was not enough to offset this impact?
So there are the major shipping lines have a long duration contract with us, which has clause of maintaining the price level at the same level as long as Indian Railways do not change the price. So the price level was not effective across the entire volume of import business. So if we look at per TEU numbers, then we have been able to get roughly about 500 rupees per TEU across as averaged out. Okay.
And lastly, if you can just comment on Faridabad performance and also how the competitive intensity is faring at Ludhiana.
Faridabad, we have been able to reach the 3,000 TEU per month level during last 3 months. And going forward, we should be able to maintain this. This is something which we were looking forward as a milestone as far as Faridabad terminal is concerned. The competitive intensity in that market has further gone up because one competitor has already started operations from Palwal in the recent past. The advantage that we have on account of the network benefit, of course, continues to play an important role for us. And if excluding Tughlakabad, if we look at the market, we are the leader as far as the Faridabad market is concerned as of now.
Okay. Great. So I'll come back in the queue for more questions. Thank you very much and all the best.
Thank you.
Thank you. The next question is from the line of Jaykant Kasturi from Dollar Capital. Please go ahead.
Sir, my question is pertaining to, firstly, for Krishnapatnam Port in terms of monthly TEUs handled, and the next question is in terms for Snowman and for utilization level, present utilization levels.
Yeah, so Krishnapatnam Port is seeing a steady growth, and we have consistently been above 1,500 TEU mark, and we are getting some new business, some new vessel calls are being introduced by various shipping lines, and the utilization level is improving by the month.
So for Snowman, in terms of the new IKEA business coming up and the Krishnapatnam warehousing coming up, so in terms of utilization levels.
Yeah, hi, this is Sunil here. So Krishnapatnam was inaugurated last week, 2 weeks back, and we expect it to be around 50% in April, and thereon around 15% per month increment in utilization is what is expected. As far as IKEA is concerned, IKEA plans to open their first store in June at Hyderabad, and that will be the beginning of IKEA operations in India for us.
Okay. Yeah, I'll get back into the queue, sir. Thank you very much.
Thank you.
Thank you. Anyone who would like to ask a question, please press star and 1. The next question is from the line of Devraj from AAA Investments. Please go ahead. Devraj, your line is in the talk mode. Can you please confirm? Due to no response, we'll move to our next question, which is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sachin sir, I have a few questions on rail business. So we got to know that Concall has signed MOU for extended gate facility at its Kathuwas terminal. Does that affect any way for you to do the business at this new terminal?
Hi, Srinidhi. We look at it purely from competition from that terminal point of view. So it would not be appropriate on my part to comment on their strategy as far as Kathuwas terminal is concerned. But over a period of time, we have seen intensification of competitive pressure on our Gadiarsaru terminal, but we have neither lost volume nor have we seen any sharp decline in our margins as far as Gadiarsaru terminal business is concerned. So going forward with the innovative solutions-oriented business that we are doing at Gadiarsaru, I think we should be able to neutralize any competitive pressure of this kind. We haven't seen any exit of business from our terminal to the competition. And in fact, there have been some businesses that we have gained from ICDs which are not within this region, are from other sub-regions of NCR. So we're confident that Gadiarsaru should be able to withstand the pressure.
Yes, sir, my question really is does this, for all import volume coming into NCR, are that by this new arrangement that somehow the Concall has managed, does that restrict that every imported container has to be routed through Kathuwas? Is that understanding correct?
That understanding is not correct. The nomination of a container on whose train it will go is dependent on what is known as an SMTP. So the SMTP is filed for a particular operator for a particular ICD. So this kind of, I think it's a misunderstanding which arises from the fact that routing of all containers for NCR is being done by Concall for its own business.
Okay.
Whereas Gateway Rail has been doing that in the past continuously. All our business for Ludhiana as well as for Faridabad was being routed through Gadiyarsuru from the point of view of taking an advantage of speedy evacuation by way of double stack operations out of Gadiyarsuru, and now out of two hubs, that is Viramgam as well as Gadiyarsuru.
Okay, so that doesn't restrict our business.
I think your perception is that even Gateway Rail containers will go to Kathuas. It is not that.
Yeah. That's what I was worried really. And that's not the case, I guess.
That is not.
Yeah. And sir, on this railways is extending its effort on the railway electrification front. So is there a risk that the route from Mundra to Gari can get electrified and the advantage that you have in terms of double stack can go?
So over a period of time, the concept of double stack under wire has got established, and all the routes on which at present double stack operations are being done will qualify for high-rise OHE. The entire dedicated freight corridor is coming up with high-rise OHE, high-level OHE, which will allow double stack operation under electric wire as well. So in no way does it risk the double stack advantage which is available on the Mundra port or the Pipavav port route. Even if the entire route gets electrified, it will be electrified from the point of view of doing double stack operations under wire.
Okay, and this is even before DFC. Like if a DFC comes in, say 21, 22, and if electrification happens in say 1920, still you will have that facility because the facility will have OHE.
Gadiyarsuru terminal is on Gurgaon-Rewari section of Northern Railway. Gurgaon-Rewari Northern Railway section of Northern Railway has already been notified and the work has been sanctioned for electrification. The electric traction distribution wire work which will be done on this section will be at a height which will permit operation of double stack trains under wire, and locomotives which are fitted with high reach pantograph for accessing OHE both on standard height as well as double stack height will be inducted for operating trains on this route.
Fair enough. And sir, last one from my side. So you talked about like possibility that you may run out of capacity on the train side because just the slowness of the train on the northwestern train. So doesn't that give you some pricing advantage for overall industry because volumes are kind of growing say 6-7% and the trains are slowing down. So the capacity is getting consumed because of slowness. So doesn't that give you some pricing advantage?
So the 6% increase in volumes is at the port town. The ICD volumes continue to be under pressure. In fact, there is some amount of reluctance on the part of shipping line to bring in higher import volumes into the hinterland because it increases the imbalance and requires empty container repositioning from hinterland into the port town. The hinterland business, which is let's say NCR as a whole as well as Punjab as a whole, has seen a very marginal improvement in the volume, and which is again only in the import direction. Exports continue to be under pressure. The NCR volume for the first 9 months show 1.2% increase in the volumes of ICD business. So from capacity point of view, we continue to be under pressure of higher pricing because the overall supply side excess in this segment continues to be there, though the quality of service provided by all operators is not the same. But when it comes to pricing, the negotiations are quite hard because there are some operators who are underselling the product in the market because their trains are not being run at full capacity. So there is no competitive pricing advantage which comes out of slowing down of trains. And in any case, since we have business coming our way, we need to increase our capacity, which as I mentioned to you earlier, we have done by way of adding capacity by taking trains on lease temporarily from other operators as well as by inducting trains from wagon leasing companies.
Thanks for answering my question.
Thanks, Mandeep.
Thank you. The next question is from the line of Devraj Radha from AAA Investments. Please go ahead.
Good evening, sir.
Yeah.
Sir, can you please let us know the DPD impact on the JNPT and for other CFS?
No, the DPD containers at JNPT, the volume has almost stabilized, and it's though in terms of share numbers, it's 36% of the CFS business. But at least 2/3 of that volume is still being routed through the CFSs. So we are okay. Our volumes are stable, growing. Actually, if you see the numbers for the last 3-4 months, there is a steady growth in the throughput, and some of it is coming from the increased number of DPD containers that we are able to get.
Okay, and sir, we will be going for a denotification in that area, JNPT, or?
No, the denotification is not required. We have the requisite permission from the customs after we fenced off part of the CFS, but no denotification is required.
Okay, and sir, is this DPD impact also, will it be on the other CFS or it won't be there?
Yes, it is on the entire industry. Yeah. It is not just to one particular CFS. CFS have lost a share which has gone to DPD.
Okay, sir. And sir, can you please inform about this Blackstone buyback, any updates, sir?
No, see, every quarter someone or the other asks this question. We cannot comment on it because when it happens, it will happen. There is no time limit for it. So, I mean, market will be informed when the deal happens.
Okay, and sir, any idea regarding how it will be funded? That will impact the debt equity ratio.
We have some cash reserves. We will use those, plus we can borrow. The company balance sheet supports the borrowing. So that should not be a problem.
Okay. Thank you, sir.
Thank you. The next question is from the line of Jignesh Makwana from Asian Market Securities. Please go ahead.
Yeah, thanks for the opportunity. So last quarter, we had a loss of about 2 crore from Krishnapatnam CFS. So can you just quantify the loss from Krishnapatnam for this particular quarter? And when can we expect operating your break-even from Krishnapatnam CFS? Though our volume have improved from 1,000 containers, monthly containers to almost 1,500 containers.
I'll take that question. Kumar here. Krishnapatnam actually today operationally now it is making profit. At EBITDA level it is positive. Consistently since the Q1 it has been positive. The loss is mainly on account of interest and depreciation.
Okay.
And the interest, because it's largely a debt-funded project, almost 90 crore project, almost fully debt-funded. So that is the reason why there is a loss. And then this loss also is progressively increasing because there is a capitalization which is happening progressively. So as and when it is capitalized, this depreciation and interest charges also increase. So now the capitalization will be complete before the end of this financial year. And but next year, assuming it operates at the current level, there will be this loss of interest and depreciation. But there is a very good confidence level that the current level of volumes of about 1,500 plus, like Captain Anand mentioned, will progressively get increasing during the course of 2018-19. And the revenue also, it is averaging about 50 lakh a month, which will progressively start increasing. So to that extent, there will be the loss will be brought down. But it is it may be, it looks unlikely right now that at the net profit level it will make a profit during 18-19.
Okay. So can you just quantify the operating profit numbers for the first 9 months for the Krishnapatnam?
First 9 months, the EBITDA for the first 9 months is about 50 lakhs.
Okay. And is it improving?
Actually, no, it is slightly a little fluctuating because what is happening is it's a new location where the port itself is handling a lot of activities. And so we are actually, apart from pure CFS activities, we are also doing transportation, we are doing general warehousing, storage, etc. So in some months, for example, in the first quarter, we did some good profit based on some bulk imports. And then the next 2 quarters have not been as profitable. So it all depends on the kind of cargo which is moving in there.
Okay.
And Captain Anand has been making regular visits, and maybe he would like to mention a few words on what are the kind of cargo which is coming now and in future also expected. Captain?
Yeah, we getting all kinds of cargo there, and now we are also creating a facility for handling stones, the granite blocks, etc. So we've created a facility for to facilitate cutting and polishing, etc. of the blocks. And of course, there is a lot of agri products also that are being routed through the general as well as the CFS. And we are also developing MP repair and maintenance yard, which should contribute to our income.
Understood. And sir, just on Chennai CFS, how has been the performance of the Chennai CFS over the last 1-2 quarters?
We are actually we are not able to give you location-wise profitability and the volume numbers. But in general, we can Chennai is operating at a good level of utilization. Both the CFSs put together. So this they will compared to previous year, they will maintain or slightly improve the performance in the current year, and that same trend is expected next year.
So are they still making losses for us?
No. Chennai 2 is making a loss. Chennai 2 is making a loss, but we have to see it actually these two together.
Okay. And sir, my data point question on Snowman Logistics. Can you give us a breakup on the warehousing and distribution revenue?
Yeah, Sundar here. Warehousing revenue was 34 crores for the quarter, and transportation was 16 crores. So totally we had 50 crores.
And what about the EBITDA breakup on the same, sir?
EBITDA out of the 13 crores breakup, 13 crores of EBITDA, 12 crores came from warehousing and the rest from transportation.
Okay. And what was the utilization ratio for the warehousing segment for the particular quarter?
Warehousing ended Q3 at 80%.
Okay, versus last year's number?
Last year was around 73%. Yeah.
Okay. And how many fleets now we are owning in the particular distribution business now?
We have around 293 vehicles.
Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Abhishek Ghosh from Motilal Oswal Securities. Please go ahead.
Thanks for the opportunity. So first in the rail segment, just wanted to understand, because of the slowing down of these trains, has it impacted the double stacking index or the double stacking proportion as well?
No, it has not impacted double stacking proportion. Double stacking proportion has been impacted because of increase in imbalance, but not on account of the slowing down of trains. Our overall double stacking numbers are also better than that in the previous quarter, because double stacking of JNPT volumes through Viramgam terminal has also started taking place now.
Fair. Okay. So just wanted to understand one more thing. Because of slowing down of these trains, has the export volumes got impacted more because, has it that shifted to road because that need to be just in time?
No. Imports, in fact, the slowing down of trains is more pronounced in import direction than in export direction. Export direction, we continue to have same patronage as far as our customers are concerned. Okay. We haven't seen any drop in numbers.
Okay. And so just one more thing in terms of the general industry, exim or the imbalance, has it further deteriorated from 2Q levels, and how has the run rate been in January?
Yeah, quarter 2 to quarter 3, there has been a deterioration as far as imbalance is concerned, particularly in Pipavav route. Pipavav exports are not as strong as Pipavav imports. Pipavav imports, in fact, have shown an improvement of almost about 6 to 7%. Okay. The trend seems to be getting corrected because shipping lines themselves are under pressure to strike and take corrective actions here. So in the month of February, we have seen some shift from Mundra port to Pipavav port as far as exports are concerned. That should help.
Okay. And so just one more thing in terms of, would it be possible to share in terms of how has the average lead distance moved? Has it further declined on an overall basis? Or
no, it has not declined for us because we operate only from the 4 ICDs. For us, average distance continues to be the same.
Okay. And in the last thing that, sir, you mentioned on the shipping lines that we cannot pass on the hike because of longer term contracts and only in an event of an increase in rail charges. But in an event where your fixed costs are going up because of the, capex being taken over at the Northwestern Railway. So is there any provision where you can pass it on to the shipping.
So on the backdrop of the increase in prices that we undertook in the month of September, October, we have renegotiated contracts with some of the shipping lines as far as the major shipping lines are concerned. And in a staggered manner, beyond, of course, the current quarter, that is Q4 of 2017-18, we have been able to enable these contracts to allow us to increase prices in case of increase in our fixed cost on account of reasons other than increase in rail haulage charges.
Well, okay. Yeah, that's helpful. So coming to CFS side, just wanted to get one understanding. With the fourth terminal now operational at JNPT, does the DPD volumes from that terminal, because of the connectivity and other things, is likely to be much higher than what we are seeing, 36% from other terminals, or how does it?
No, it's very early days. I mean, PSA has just about commenced operations. They're still facing a lot of issues there. And secondly, the evacuation from the terminal, the roads and rail infrastructure is still not well connected. So I don't think it's going to impact anything right now.
Okay. And just one last thing, if you can help me with the capex number for individual segments, it will be really helpful.
CFS side, we are not anticipating any capex. Krishnapatnam also is completed, and except that is trailers which periodically get phased out, old vehicles getting phased out, but there also we are not anticipating any major numbers.
Sure.
On the rail side, we would be buying some extra land in Viramgam to expand our ICD operations once it starts. So there will be capex over there. We have not yet finalized the size of the land and the investment over there. But otherwise in rail, because now the trains can be leased out from the leasing companies, we don't expect any major capex on that, but all put together it will be say about 100 crores. For Snowman, again, a business plan is being made, and we want to increase our capacity by about 25 to 30% in the next year. So currently our capacity is 100,000 pallets. We would like to go to say 120, 125,000 pallets, and that would again mean something like 100 crores capex.
Okay. Yeah. Thanks for answering my question, sir, and all the best.
Thank you.
Thank you. Anyone who would like to ask a question, please press star and 1. The next question is from the line of Krishnendu Saha from Quantum Mutual Fund. Please go ahead.
And thanks for taking my question. Just, Sachin sir, just a couple of understanding. I joined in late. Hello, sir.
No worries. You can ask questions. Of course.
Just, what is the portion of double stacking right now we are doing?
So the overall percentage is still hovering in the range of about 60 to 65%. Quarter 3 it was 63%, and this is the index that I'm talking about. Okay. The incidence has since the imports have gone up much more than let's say improvement in exports. The double stacking of imports has increased while adequate double stacking of exports is not becoming possible. Okay. So the imbalance has resulted into reduction in opportunity to do higher double stack.
So on an overall basis, is there a number I can understand that how much is being double stacked?
63% of double stackable volume is being double stacked at present. Okay. Because you also need to maintain regularity of service.
Okay.
So from that point of view, it is not possible always to double stack all the containers which can be double stacked.
Sure. So if the electric line comes into being, how much can it increase double stacking? Because I believe a large portion of our revenue will be from from Munza and Pipavav. So how much would be from, how much can we increase the double stacking? How much would the index go up to then?
The double stacking is not an index of electrification or the route on which it is operated. It is essentially a product of what is the imbalance at that point in time. So let's say if you have 180 imports and 90 exports, you can have, let's say, 90 upon 270, which is roughly 33%. So the maximum number of double stacking which can be done is considered to be of the order of about 17 to 18% of the overall volumes, and about 80% of the 40 feet container volume can be double stacked. So we are at 63%. I think we should be able to maintain ourselves at this stage as of now. But if the imbalance reduces further, then we should be able to improve this and go closer to 80%.
Okay. Imbalance. And sir, one more understanding, could you just give me some economics as to how we are getting benefited because of the double stack? I know we save in empty running, I know haulage charges and all, but any more specific you can give me numbers?
The numbers are at present not available here, but what we can do is that you can give me a call, say around 6:30 today, and I'll share the numbers with you.
Sure. And last one question. So haulage charges, what's your view? Or there's no view at all?
No, we have a view that it should be consistent in terms of, let's say, price that Indian Railway recovers from us. One of the defect in the current model is that the current model levies rail haulage charges on a per TU basis on a particular weight slab for a given distance. So it is more in the nature of variable cost for us, and it contributes almost about 75% of the total cost for us. Whereas rail haulage charges technically should be a fixed cost per train, whereas the composition of the train, how many containers that we carry, should decide our average cost for carrying each container on that train. So we have represented that matter with railways, but I don't think railway is in a mood to switch from a per TU rail haulage cost to a per train rail haulage cost.
Okay. Thank you, sir. Then, sir, I'll give you a call later. Thank you.
Thank you. The next question is from the line of Rakesh Vyas from HDFC Mutual Fund. Please go ahead.
Yes, sir, a few questions. First on rail side. Sir, you highlighted that exports growth is reasonably slower than imports. I just want to understand why is that given there is a double stacking opportunity available on export, we are not able to attract volumes away from road to rail? Because I believe although there are a lot of empty movement happening of containers, there would still be a large proportion of export volumes that is going from NCR region towards Mundra and Pipavav. And why we are not able to capture that?
So there are three reasons for this. Number one is that the exports are primarily manufactured products, whereas imports is predominantly raw material coming into India. Raw materials normally are in the nature of dense, most of it is scrap. About 50% of the total imports into India is metallic scrap.
Yes,
so it comes in 20 feet containers. What goes in 40 feet containers on a per container basis is lightweight cargo. And after two last increase in prices that we have experienced in 2011-12 and 12-13, which was of the order of about 25%, 27% consecutive increase in rail haulage charges, we have lost a lightweight container business to the road. Road now carries it at a price which is lower than the rail haulage charges that we pay to Indian Railways.
Even if it is double stack, sir, even if it is on second stack.
So the double stack advantage is not for pricing. It improves your overall rail haulage charges. There is no product called double stack that you carry those containers only on double stack. So the average advantage of double stack has always been in the range of about 6 to 7% savings of rail haulage charges, which has to be distributed, partially passed on to lightweight containers. Even if you give the entire advantage of rail haulage charges savings by double stack to these 40 feet containers, even then the road price is still lower than your cost.
Okay.
So the cargo doesn't come in. That is the first reason. Now the second reason is that imbalance requires certain number of trains even after double stack to be taken to the port. So there was a time when we used to have a split of roughly 55% imports and 45% as exports as overall components of EXIM trade. This has seen a deterioration from there up to a level of 40-60 split also. So this reduces the possibility of doing double stack in export direction because the export numbers fall short of the number which is required for carrying volume in double stack. So most of the time what we end up doing is that we carry 90 containers on an export train and 150 to 160 containers in the import train.
Okay.
It is a return haul part of it.
Got it. Got it.
And the third aspect, of course, is service guarantee. We need to run trains to Mundra Port, Pipavav Port every day from each of our port. So that requires that even if the containers for the next day can be loaded onto the train with double stack, you still can't do that because you need to give a frequency of rail operations, rail service from a terminal to your customers. So that also results into some amount of loss of opportunity to do double stack.
Got it, sir. Fair point. So my second question relates to Snowman business. So despite we seeing lower occupancy than what is desired and lower yields as well, we are still planning to do a large capacity addition. If you can just highlight what is the strategy, because my thought was that provided we have scope to both improve occupancy as well as improve yields, that would be a much beneficial in terms of profitability compared to capacity addition.
You see, of all the locations that we have, some of the locations are 100% full and there is a demand for extra space from our existing customers only. So that is one reason. And second thing is that we have to go to new cities to expand our footprint. We cannot just wait for existing facilities to get full and then go, So that is why we have major capex plans for or expansion plans for Snowman.
So broadly, if you can highlight what kind of returns do we normally or we have seen in tier 2, tier 3 cities where we have expanded in recent times. Because my thought process is yields there probably are lower and occupancy also is lower than what our average numbers are at around 75%. So it does not probably make reasonable economic sense. We could probably postpone this capex for some period of time. Just want to get some highlight on this because I understand last 2 years we have not added much capacity compared to what we have added in earlier period. But given that the occupancy still is lower, your thoughts on that?
Yeah, some places the occupancy is lower. But as I said, some places have big demand and we have to fulfill those demands. And even at the new locations, we have been approached to provide the services. And since we are in 15 locations and 30 warehouses, we need to expand our footprint in the cities where the existing customers are having demand, So when we will make the capex, everything will be in mind. And every city, tier 1, tier 2, tier 3, the economics is totally different. But then the customers are the same. And now with GST gone, they want to continue, they want to provide us additional space and additional locations. So it will be driven by that. It is not simply that we want to expand the capacity by so many pallets. It will be all driven by the demand from the market.
Got it. And last point on this, sir, the change in the business model towards owning assets. So on the existing base, have we completed that process already? Most of warehouses and so trucks, I understand most of it is now owned, but most of warehouses, etc., is now on books, or we still need to do more spending to acquire that?
Yeah, I'll take this question. See, what we are doing is we have almost say up to 1 lakh pallet capacity what we already have. 65% of our warehouses capacity is on leased lands. Some of this, it's not viable to go and buy those lands, like especially the metros. Land is very, very expensive and it doesn't make business sense to buy these lands and, leasing is a better option here. But the new capacities, wherever we have gone off late, like it started with Krishnapatnam, then Sri City we have purchased land, and all future projects we are planning to procure land and build the warehouses on them. As far as assets are concerned, other than land, we have always owned all the warehousing assets.
Okay, fair enough. I'll get back to you. Thank you so much.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity once again. Sir, I have this question on rail business again. So with this Viramgam coming up, so how is Gateway positioned in terms of time it requires to ship a container from NCR to JNPT compared to say maybe an electrified route which goes to central part of India?
So the theory behind this is that you need to accumulate 90 containers to run an export train, whereas there are more containers on account of imbalance which are there already at JN Port, which in any case get delayed because the train does not reach there at the same frequency at which you need to run a train from JN Port for a terminal in North India. Right. By using double stack opportunity from Viramgam to Gadiyasaru and by shuttling it between JNPT and Viramgam, one is able to evacuate those containers much earlier than those would have got evacuated under normal operations of single stack. So actually the dwell time of these containers at the port town goes down on account of double stack operation, and it improves the quality of service. So it does not result into delay in transportation. The overall transit time, departure from JN Port to arrival at Gadiyasaru may increase, but the overall dwell time, that is arrival at the port to arrival at ICD, actually comes down on account of this.
Yeah, but for the customer, it's really when it gets offloaded from the ship and the time it reaches to ICD, that is more relevant from the customer point of view, right?
That is what goes down on account of double stack. That is what I mentioned just now.
Okay, that goes down, right?
Yeah, that goes down because of double stack. You don't wait for a train to come from export train to come. Instead, you shuttle containers between JN Port to Viramgam much ahead of arrival of exports. And that is why the containers are evacuated earlier than those would have got evacuated because of an export train arriving into the port.
Right. Understood.
So it improves the quality of service for the customer.
Yeah, I understood. So you're getting consolidation benefit at Viramgam, right? So
Viramgam in any case is a consolidation hub primarily.
Right. And sir, you said 1.2% volume growth. Was that for Q3 or was it for 9 months?
This is 9 months all put together, YTM.
Okay, fair enough. Yeah, those were my questions. And sir, last one. The last one, sir.
Our growth has been more than that, but it is the market growth which has been 1.2%.
And sir, how much would have been the addressable market, that is road plus rail, would have grown? Is it possible to know that?
Yeah, it is possible to know that, but I don't have that number now with me for the quarter 3 as well as YTM number. I'll be able to share it after the conference call with you.
But generally, rail would have lost market share, or it's not a significant number?
Overall numbers in all the 3 ports put together, that is Mundra Port, Pipavav Port and JN Port, at present are at the order of about 20 to 21%. In fact, some of the industry leaders have already mentioned that. JNPT alone used to be of the order of about 28%, which has dropped down to a level of 15% because...
no, sir, I'm just talking like 9 months or 9 months, like this period of 9 months, not the period of 2-3 years, just this 9 months.
So I will have to dig out this number and share it with you because it is an industry number. I need to get this information.
Sure. And the last one, sir, we are seeing that the largest player is booking this service from exports, some incentive income. So have you looked at that? Why shouldn't Gateway get that?
We have applied for similar benefit on account of the exports, what is called SIES. So the view that we have taken within the company is a little conservative view that we will not book it to P&L unless we physically receive the scrip as well as are able to sell that scrip in the market.
Okay.
We will not book these let's say incentives only on the account of anticipated accrual.
But do you see, sir, you getting it? Not you, but generally, do you think that you will be able to?
It is available to all the operators. It is a scheme which is open to all operators, and all operators have applied under the scheme.
Okay. Yeah, fair enough. Thanks, sir. That answers my question.
Yeah.
Thank you. Ladies and gentlemen, that was the last question, and with that we conclude today's conference call.